Good morning and good afternoon, everyone, and a very warm welcome to today's webinar, which is From Cash to Code, the Evolution of Social Payments in Kenya. And we are delighted that you've made time to join us today to explore how Kenya's social protection landscape in terms of payments has evolved. And I'll start a brief introduction on myself and our session today. So my name is Martha Omaido Adeke. I am your moderator today. I am a digital technology specialist at Development Pathways as a systems analyst and quality assurance specialist. And for today, our webinar will be accompany the launch of a paper that examines Kenya's evolving social protection landscape with a particular focus on digital transformation, which is one of the 4 pillars of social policy here in Kenya, of social payments, and specifically the Consolidated Cash Transfer, which is in short CCTP. And it traces the country's journey from manual cash-based disbursement systems to fully digitalized mobile money payments. And just a few webinar objectives that I will highlight is we're going to present key findings and lessons of Kenya's transition to a fully digital social protection payment system. And we're also going to foster dialogue and peer learning on the future of digital social protection systems. And I'm going to briefly introduce our co-speakers for today, who are also the publishers of the paper that we'll be launching today. And just before that, I'll go through a few session essentials. So I'd like to bring to your attention that this session is being recorded, along with the presentations that will be displayed and that are also available on socialprotection.org. And also within the session, we have the options of turning on your automatic captions, which are AI generated. So on your screens, you'll be able to see a section highlighted as CC where you can turn on the captions to follow along with the sessions. And then in case you want to present yourself or make any comments or post any useful links for this session, feel free to use the chat box. And then for our Q&A session, feel free to share your questions with the speakers. Either it can be a general question or a question directed to a specific speaker on their session. You can feel free to use the Q&A box, but we will also have a session specifically for a Q&A, but you can feel free to post your questions there. Just to highlight the session flow, we're going to have an introductory session of 10 minutes, after which we'll have our speakers presenting the contents of the paper, which will cover 40 minutes. And then we can have a session for independent responses, which will also take 15 minutes. And then we'll have finally a Q&A session alongside closing remarks from me as your moderator for today. But feel free to post the questions that we can also reference during our Q&A session at the end. So just to briefly introduce our speakers and discussants for today. For the first speaker, we have Richard Chirchir, who is a principal digital technology specialist from Development Pathways, who will lead the first session of this discussion. After that, we're going to have Paul Njoroge Mwangi, who's a principal social development officer from the State Department of Social Protection and Senior Citizens Affairs of the Republic of Kenya. And then for our discussants, we have Moses Kamau, who is the Director of Social Development, Ministry of Labor and Social Protection, State Department of Social Protection and Senior Citizens Affairs of the Republic of Kenya. And then finally, we have Plun Oyunge, who's the Chief Growth Officer at Pesalink. So just to start the session, we have a few light questions to get our minds going and also readiness for the session that's about to start, being led by Richard Chirchir, followed by, so we have, on the left, we have the poll question, and on the right, you can feel free to scan so that you can provide us responses on these questions. So question 1, when you think of social payments in Kenya today, what comes to your mind first? So for us to participate in answering the poll question, we have 2 poll questions. Feel free to scan the QR code displayed so that you can provide your response. On when you think of social payments in Kenya today, what comes to mind first? And the second poll question that we have is, when you hear digital social payments in Kenya, what's the first thing that comes to mind? So you can feel free to scan the QR code that had been shared, but the poll questions have also been posted on the chat. You can feel free to click on the link and provide a response, and then we can go over the responses as we proceed with the session. Okay, thank you. And with that, I'd like to welcome our first key speaker, Richard Chirchir, to take us through the first session of the webinar, covering from cash to code, the evolution of social payments in Kenya. Welcome, Richard.
Yeah, thank you, Mother, and thank you. Good afternoon, good morning, participants from around the world. It's a privilege to present this paper that we co-authored together with Paul Njoroge, who is the Principal Social Development Officer at the Ministry of Labour and Social Protection in Kenya. The paper is titled, as Mother has already mentioned, From Cash to Code, the Evolution of Social Payments in Kenya. The idea was to trace the trajectory of the reforms that have been made by Kenya government. There are 5 of them, and we get into the details over the past decade, from manual cash delivery to the current phase, which is fully digital. The paper will be circulated, and it's going to be available on the link in front of you. So it's not a very long paper, so feel free to review the paper in detail. It's about 15 pages. In terms of the chapters, the paper is organized around 5 chapters. The first chapter looks at the setting of social protection in Kenya. Social payments are one of the types of social transfers in Kenya. There are multiple others. The paper also delves into the social assistance delivery platform. It then gets into the detailed conversation, which unpacks the 5 attempts and 5 lessons. So I think we're going to provide more details on that. The 4th issue, we'll look into the lessons and the insights, why the 5 reforms. And of course, later on, we'll also ask the government officers led by the Director of Social Assistance, Mr. Kamau, to be able to give us some insights on what were the main reasons why these reforms were undertaken. And then, of course, the paper also has a conclusion. As part of the introduction, I will start by just situating the paper within the social protection landscape in Kenya before asking my colleague, Paul Njoroge, to be able to explain the story, the journey over the 5 phases. So just like any other country, Kenya has a specific definition of what they consider to be social protection. The definition is found on the Social Protection Policy 2023, and it defines social protection as a set of policies, programs, interventions, and legislative measures aimed at cushioning all Kenyans against poverty, vulnerability, exclusion, risks, contingencies, shocks through their life cycle while promoting realization of economic and social rights. And the social policy or social protection in Kenya is organized around 4 main pillars. The first pillar is related to income security. and basically means a set of programs, both contributory, also called in some other context, social insurance, and non-contributory programs, which are tax financed. Now, the main purpose of the paper is to trace the journey of the reforms for the non-contributory social protection programs implemented by the Directorate of Social Assistance within the Ministry of Labor and Social Protection. The other pillars which are covered by the social protection policy include the social health protection, focusing on universal health coverage through insurance and access to essential services, shock responsive social protection, which is one of the pillars that addresses the climate-related shocks, such as droughts, pandemics, forced displacements. The fourth pillar is complementary programs, strengthening human capital, enhancing livelihoods, expanding social welfare. In other countries, this particular pillar would be equivalent to what we call the cash plus interventions. So with that introduction, so we're going to, the focus of the paper is to trace the journey of the reforms related to social payments, with particular focus on non-contributory social protection schemes. So I'll ask my colleague, Paul, to get into to have his camera turned on so that he can be able to present the non-contributory social protection programs. Paul?
Thank you so much, Richard, and good afternoon, good morning to all viewers across the world. My name is Paul Njoroge. I work under the Directorate of Social Assistance under the State Department of Social Protection and Senior Citizen Affairs, Ministry of Labor and Social Protection. The Directorate of Social Assistance is the one mandated to implement the National Social Assistance Programme, popularly known as the Consolidated Cash Transfer Programme, locally known as the Inua Jamii Programme. So maybe just as a background, maybe to take us through the journey. We have three main programs that cover the entire 47 counties across the country. One is cash transfer for orphans and vulnerable children. The other one is cash transfer for older persons, 70 years and above. And the other main program is a cash transfer for persons with severe disabilities. That also covers, goes across the 47 counties. In addition to that, we also support disbursements of top-ups for the Cash Plus programs, and one of the Cash Plus programs that we support is the Economic Inclusion Program that targets households in selected districts, and also the Nutrition Improvement through Cash and Health Education Program that is also targeting households with orphans and vulnerable children within, again, selected districts across the country. So CTOVC, or the Cash Transfer for Orphans and Vulnerable Children, started around 2004 as a pilot program, and it has grown over the years, and the numbers have increased to what we have currently, above 443,000 households that are benefiting from the cash transfers. We usually offer a monthly stipend of around 16 USD. That is equivalent to around 2,000 Kenya shillings, and that is per month. And same case for the older person program, it's also 2,000 shillings per month. And the older person cash transfer began in 2007, again as a pilot program, and has over the years scaled up to around 1.2 million beneficiaries, again spread out across the 47 counties, with a monthly stipend of 16 USD and equivalent to around 2,000 Kenya shillings. We have that program, the cash transfer for persons with severe disability, that we implement jointly with the National Council for Persons with Disability, which started around 2010 and has over the years increased in terms of numbers to the current numbers of around above 63,000 households across the 47 counties. Again, the disbursement amount is the same. The EIP program has around 5,837 households in 5 pilot counties, but there are plans to expand this in the next couple of years to reach out to 20 counties. And this program normally offers support in terms of consumption support. And this is 2,000, I think around 16 USD for consumption support. And that is the household support to just take care of basic needs within the household. But there's also another support of around 23 USD that goes for the assets and the investment by the household. So this is just to involve themselves in business and also income generating activities. The last program that we support in terms of disbursement is the Nutrition Improvement Through Cash and Health Education program that is implemented under the State Department for Children's Services, which has roughly 21,000 households, and it cuts across 5 counties, and with a plan to move to 25 counties in the current plan. So this also offers a top-up into the regular cash transfers of around 4 to 8 US dollars. That's around 500 to 1,000 Kenya shillings of top-up to the regular cash transfer. Both the EIP and the niche are still pilot programs, and they were started in the year 2019. Next, Richard. Yeah. So basically, this graph briefly shows the growth in terms of the numbers across the years for the three main programs, and you can appreciate the fact that it has been growing over the years, but a bit stagnant in the last couple of years. For the financial year 2023-24, 2024-25, and the current financial year, there has not been an increase in terms of the numbers. So that briefly illustrates the growth in terms of the program. So in terms of the social assistance delivery platform, and this is where the Directorate of Social Assistance actually sits. We have 5 core functions which support the implementation and the management of the Consolidated Cash Transfer Programme. And one of the function is targeting, enrollment, and recertification function. And this function supports the program in terms of identification of beneficiaries and beneficiary households, registration, and also enrollment into the program. This particular function uses a module called the targeting and enrollment module that actually uses a tool called the harmonized targeting tool. And this tool is a standardized questionnaire that supports identification and registration of potential households across the social protection sector in the country. We have the other key function of the directorate that deals with the payments function. And here we are looking at the management of the disbursements. And this is the monthly disbursements of the cash to the beneficiary and the beneficiary households. So this particular function looks about the issue of the preparation of the payroll, the pre-payroll checks, the issues of the exchequer request to the National Treasury, the issues of payroll sharing with the payment service providers, reconciliation, and also the funds management of the program. So that is the one of the busiest function of the program in terms of management of the disbursement for the social assistance program. We also do have the M&E function. This one promotes the continuous, tracking of the program in terms of the implementation. We have the issues of tracking issues of the impact, the lessons, and also helps the management in terms of making informed decisions in terms of enhancements and improvements of the program as we move on. So it's a critical function that supports both the national team and also the sub-county teams in terms of strengthening the implementation of the cash transfers. We have the grievance and the case management function, which is also a very key function. And this one is it supports the beneficiaries across the country and also non-beneficiaries to actually raise concerns about the program, be able to raise grievances and also get their grievances addressed. Issues of submitting, for example, updates and request for updates and changes in beneficiary households and so on and so forth. So this particular function supports the two-way citizen engagement kind of a process where we have the program interacting with the citizenry in terms of the implementation and the various aspects on the various aspects of the program. But all these functions are critically supported by the Consolidated Cash Transfer Programme Management Information System platform, which actually automates all the four main functions that I've mentioned above, and is a digital platform that is both web-based and it actually has API or application programming interfaces with other systems and registries, both government and non-government. So we have here linkages with payment service providers in terms for purposes of payment, payroll sharing, reporting, and also reconciliations. We have linkages with national registries like the National Registration Bureau for purposes of validation of national IDs. We have linkages with the enhanced single registry for purposes of targeting and registration. We have linkages with the civil registration and vital statistics database for purposes of also validating issues of births and deaths. So and several other linkages. So this is the core engine behind the implementation of the cash transfer and the social assistance program. This particular platform also has an embedded mobile application that supports the processes of recertification, the processes of targeting and enrollment. This particular platform or the application is largely used by county and sub-county officers during registration and recertification processes. Having introduced the three main programs and the two complementary programs and the functions of the Directorate of Social Assistance, maybe we can now look at the phases that the main cash transfers has undergone in terms of the improvement in terms of the cash delivery. And at the inception of the programs, that is CTOVC and older persons, between 2004 and 2009, we did have largely manual payments. And then between 2010 and 2014, we had semi-manual payments. So on the manual payments, we usually use the district treasuries. Designated government officers at the district level would go and cash out from the bank, and then they would follow the beneficiaries in their respective locations and be able to pay them manually using a schedule of payment that indicates the amount and the beneficiary details. Moving to semi-manual payments delivery through the Postal Corporation of Kenya. This is where the government agency, the Postal Corporation, which actually had branches across the main districts of the country, was used again to disburse the cash. This again was a semi-manual because there were issues of manual payrolls being printed and sent via courier services to the various branches across the country. And these particular payroll schedules would now be used by the Postal Corporation staff to be able now to disburse the funds to the beneficiaries. Between 2015 and 2017, there was a huge improvement in terms of moving to a card-based payment that was that time facilitated by two main commercial banks, that was Equity Bank and Kenya Commercial Bank. And this one was a bit easy to the beneficiaries, because what they needed to do is just present themselves to the bank, and they get enrolled through a rigorous KYC or Know Your Customer process, and then they will be issued with a limited feature card that will be used to redeem the payments through the agents and also over the counters through the branches. So this was also limited in terms of, first of all, it didn't have features of a real bank account or a real account. So, for example, you would find that after the expiry of the 21 days of payment or the window of payment, then the funds will be recalled, and therefore the card will not hold any balances. Between 2018 and 2024, there was again a huge improvement in terms of the delivery model. And at this point is where now we introduced the choice model. And choice model, by this we mean that we introduced or we invited multiple payment service providers to come forward and be able to participate in the provision of the payment service. And that's where now we had 6 main commercial banks playing the role of the payment service providers within the implementation of the payments model for the main cash transfers. So here we had the account-based had more features. For example, the beneficiaries could retain some of the funds within in the accounts. They could introduce some of their caregivers to be part of the managers of the account, what we used to call shared account responsibilities. And also, of course, the account-based had more other features like store of value for the beneficiaries, and so on and so forth. So this one also gave beneficiaries an opportunity to also transact through the widespread agency network provided by the 6 main commercial banks. And now coming to 2025, and to date, there was a migration and a major transition to now a fully digitized payment solution, where now we are using the mobile money platforms, and in this case, specifically the M-Pesa, and running supported by the eCitizen government portal. So here we are having our beneficiaries now accessing their money at the comfort of their homes and at the comfort of the nearest M-Pesa agents, which are spread across the country with the footprint of around 300,000, over 300,000 agents are spread across the country. Next, Richard. So maybe if we can now look in detail in terms of the district treasury-based disbursement. And here, as I said earlier, the process was 100% manual, and therefore it had its own weaknesses. But looking at the strengths, perhaps it provided a simple solution in terms of implementation in low technology settings. At that particular point in time, the program had not, developed in terms of the adaptation of modern technology in terms of identification and verification of beneficiaries, but also the country was also moving towards adaptation of the improvement in terms of telecommunication, and therefore this was seen as a better or an available model of payment at that particular time. So also the fact that the government staff were the ones controlling the disbursement also presented an advantage in terms of the management and the handling of the cash. But on the other hand, there was minimum or no authentication or reconciliation mechanisms. So, for example, you would not know, for example, in near real time, how many have received their funds and how many have not received their funds. So this used to be a tedious manual process. Of course, this particular model was also faced with high risk of fraud. Of course, errors in terms of identification and registration of beneficiaries and payment. And of course, in some instances, corruption in terms of the handling of the cash at the district level. It required long distance travel for beneficiaries, yes, because beneficiaries will gather at a central place, maybe at a chief's camp or at an administrator's office, and this is where they would receive their money. So they used to travel long distances to access funds. Obviously, it was a manual paper-based process with high administrative burden. Of course, printing of the schedules of payment and disbursing these schedules to districts so that they can be accessed by the district officers used to be a tedious process. There are instances of uncollected funds which had to be returned to the National Treasury. Again, this was another tedious process in terms of doing a reconciliation and sending back the money to the National Treasury. It was also faced with risks when moving the bulk amounts to location of beneficiaries. Where beneficiaries in districts where beneficiaries were many, it posed a risk to the officers in terms of movement. And sometimes they used to hire security personnel to move around for purposes of security. Next. Moving on to Postal Corporation of Kenya, a model of 2010 to 2014. This is now where the government engaged a national government agency, the Postal Corporation of Kenya. This was government, and therefore there was a bit of confidence in terms of the handling of the payments. So this one was slightly wider in terms of geographical coverage. We had in the main district, we had the agents covering the main districts, and these are the branches, the post office branches across. So in terms of the spread, it was a bit widespread. It was government controlled, of course, and therefore there was a bit of that confidence coming from both the implementers and also the beneficiaries. And of course, the beneficiaries had some trust with the Postal Corporation by the virtue of the fact that it was a government parastatal. But again, looking at the model, you will realize that it was again largely manual. Again, a lot of paperwork, the printing of the payment schedules. I think we used to print 3 copies of the same payment schedule, and again disbursing sending the same schedules across the country and to the post offices branches for purposes of disbursements. and then a copy of the same would again be sent back to the headquarter for purposes of running reconciliation. Very tedious process. There was no electronic verification or reconciliation. Again, you will not at a glance be able to tell how many beneficiaries have been able to receive cash and how many were not cashed, did not manage to receive their cash. Fiduciary risk, of course, very high in terms of the handling of the cash by the staff of the Postal Corporation and also the sub-county team. So there was a risk in terms of that. And of course, beneficiaries had to travel long distances to be able to access the payments. Of course, there wasn't a robust grievance and redress mechanism, so the program did not benefit in terms of getting complaints, and concerns and requests for case management from the beneficiaries. Moving from the Postal Corporation of Kenya, and based on the weaknesses identified under the Postal Corporation model, the government decided to move the payments to commercial banks, or to deliver the payments through contracted payment service providers, and those are two banks, Equity Bank and Kenya Commercial Bank. And this was again a positive step or development towards strengthening the delivery channels for the cash transfers. One of the key strengths for this particular model, the limited purpose account, was that there was a bit of the use of electronic payroll process, and this one was implemented between the program management information system and the core banking systems, where payrolls were shared electronically. And then there was also the aspect of increased financial infrastructure coverage. These banks came up with several branches across the country. So they introduced the branches across the country, but also the agency networks that also meant that the beneficiaries could now access funds closer to their locations. There was a bit of reduced risk compared to the manual systems highlighted above, because in terms of the audits trails, and in terms of the regular government audit processes, enhanced reconciliation processes, there was a reduction in terms of the risks associated with the disbursement. But also beneficiaries' trust went up, because now working with trusted service providers, they was able to have that confidence in terms of the services. However, this particular model did not actually provide for the use of two-factor authentication at payment points, and therefore we will not verify, other than the use of the national ID and the use of the bank systems where transactions were happening at the bank, at the branch level. You would not immediately tell the authenticity of the beneficiary cashing out the payments. Again, in terms of reconciliation, it was a semi-manual reconciliation where the reports will be relayed back to the program after the payment process had actually happened. Challenges in terms of proof of life. So especially for the older persons program, where the attrition rates are a bit high, there wasn't a very quick process of proofing or lifeless check for the beneficiaries, and therefore in some instances you will find that beneficiaries who are declared deceased would still be on the next or third schedule of payment before we got the report from the sub-county office. Of course, long distances to pay points again, especially in semi-arid and arid lands. So those are far-flung counties. Again, the bank agency network was not very good, and therefore again, they used to be forced to move long distances to access their payments. In terms of moving on to a more robust and a choice-based model in 2018 and between 2018 and 2024, the program and the government invited more players and commercial banks into this particular program in terms of provision for services. And we had 6 commercial banks which actually participated in this particular process of disbursement. We had Equity Bank, Kenya Commercial Bank, Cooperative Bank of Kenya. We had Post Office Savings Bank, Kenya Women Finance Trust, and the National Bank that actually participated in this process of disbursement. They went through a competitive process of recruitment by government. The use of the multiple service providers, the 6 commercial banks, again brought with itself strengths and advantages to the program. And one of it was that it encouraged the saving habit. So the bank model, this one particularly for the choice model, the features were even more enhanced. For example, the beneficiaries could retain some amount of money in the account. They could deposit funds or money from other sources into the account. So it actually encouraged the culture of saving. There were no ledger fees charged on this account. The withdrawal fees were free. It was able to interpret, and there was aspect of switching option where the beneficiary would switch from one payment service provider to the other if they felt that they were not offered the correct services or the better services. This particular model introduced the aspect of the biometric registration or enrollment, which improved the security, and of course, it enhanced the proof of life for the program. Of course, it came up with the real-time monitoring of the disbursements. So there were system handshakes between the program management information system and the banks, and we would get what we call the activity reports on a real-time basis whenever disbursements are happening. And you will know, for example, when transactions have happened for a particular beneficiary household and at what point of disbursement. Is it an agent, an ATM, or over-the-counter disbursement? So these reports would come directly to the program. Electronic reconciliation, of course, reconciliation issues were addressed by this model, but we also had a tiered commission tariff that actually encouraged the banks to move the payment services closer to the beneficiaries. So you would see, for example, in ASAL areas, so arid and semi-arid lands, you would see banks being motivated to open more agent networks there to be able to deliver payments, because the commission in those areas was a little bit high. There was also the tracked and collected funds in terms of the clawback. So whenever beneficiary households did not collect money, this particular report will be sent to us, and the money will be clawed back to the government in real time, on real-time basis. Of course, even as such, it also had its own weaknesses, where we are saying that the model still required access to banking agents. So these beneficiaries would still be required to walk to either the banking halls or the ATM machines or the bank agents to be able to, to access their funds. This particular model also excluded those without the national ID or phone number, because national ID was a key requirement for enrollment at the bank. So if you didn't have a national ID, then therefore you will not be able to, access the funds. In some rural areas, the model still lacked adequate bank agent coverage. And again, was true in arid and semi-arid lands, where you would find that the beneficiaries also had to walk long distances to access payments. Of course, the process of procurement for these 6 commercial banks was also a lengthy process to bring them on board. and to be able to have an agreement on the tariff that the banks are going to charge for the beneficiary transactions. But of course, beneficiary face a bit of fatigue during contract transition. Every time we have to onboard PSPs, there was a bit of fatigue because beneficiaries would be required to again enroll again afresh with their payment service provider of choice. So, and moving on to the mobile money platform that we are currently implementing and which was piloted in 2020, November, December 2024, and fully rolled out in January of 2025. Here we are using the government portal, and that is the eCitizen. The eCitizen portal, which is a government portal for the delivery of government services across the ministries and departments, and riding on the M-Pesa platform to be able to deliver the cash. So one of the strengths of this particular model is that it is fast, efficient, and also convenient in terms of delivery of payments. Because once the disbursement has been done at the payment service provider level, it just hits the beneficiary phone number immediately, and they're able to get notification in terms of the message, which maybe you have seen in that particular image there, an example of a message that they usually receive, and then they are able to, cash out at the nearest M-Pesa agent, or they can be able to transfer the money to their main M-Pesa account, and they're able now to transact. They're able to use the funds to pay for services and so on and so forth. So this is fast, efficient, and convenient. It is also done in real time in terms of reconciliation. So we are getting real-time reports in terms of disbursement, in terms of credits, in terms of withdrawals, unique withdrawals. Every time they happen, we are able to see both at the payment service provider level and also at the program level. With over 300,000 M-Pesa agents across the country, this model provides a more available or accessible way of reaching out to our beneficiaries. So typically in Kenya, you would find even at the village level,
Sorry, just
you
to cut you short, as the timekeeper and moderator today, I'd just like to flag and a gentle reminder on time. So we're almost exhausting the time allocated, and we still have Richard also. So if we can summarize and then hand over to Richard also, so that we can keep time. Thank you.
Thank you so much, Mother. Yes, so in terms of the agency spread, this model has provided that. So it's also closer to beneficiaries in terms of the model, including in the very remote areas. And of course, this one has provided, in terms of cost cutting, reduced transaction cost, and is fully integrated with the national ID systems for the know your customer and the proof of life processes. Of course, minor weaknesses, for example, in terms of onboarding challenges, especially for older persons who did not initially have M-Pesa accounts. There were issues of initial rollout at arid and semi-arid lands. In terms of, again, the reach out and the agency spread initially, but of course, a continuous need for agent training in terms of the beneficiary sensitization and the program value systems. So at this point, I would want to hand over to Richard so that we can look, for example, at the lessons learned and the insights in terms of the reform process. Richard.
Yeah, so thank you so much, Paul. I think it's a lot of work to try to pack those 22 years of experience by the ministry into 40 minutes of time. So I'll quickly move into the question that will be on the minds of many of the participants. But the question is why? Why do 5 reforms, right? like every other 4 years or 5 years, you're doing reforms. So I think we've done a bit of analysis, and a lot of the work across the different phases or 5 reform phases was driven by demand and supply factors. So for the manual cash, for example, it was just an initial phase. There were low digital literacy, preference for cash, limited financial access. While on the supply side, there was a strong push to get the cash transfer programs, non-contributory, getting rolled out. And more importantly, there was also the need to have administrative control. In terms of the semi-manual PCK-based model, distance was an issue. There was the need, Treasury as district offices, Postal Corporation had more offices. There was always the need to reduce the burden in terms of travel, and then, of course, manage the transition gradually. In terms of the supply, of course, the infrastructure availability of the Postal Corporation offices was an important factor, reduce cash risk. Although there was still cash, there was still a bit of a reduction if you transition from the manual one. When the shift was done to card-based payments, the main demand factor and considerations were payment predictability, improved security, banking exposure, while supply factors included fiduciary risk management and exploiting, of course, the banking infrastructure and bank branches across the country. The shift to the choice model was driven largely by a provider accessing a wider pool of financial service providers, convenience to beneficiaries, improved dignity so that they can get the same services that are enjoyed by the citizens, addressing the last mile, financial inclusion considerations, savings, and in the supply side, maturity of the payment market, and of course, introduce competition, which was meant to drive down the transaction costs and strong oversight. And of course, that wasn't enough again. Finally, you have the fully digital platform. And of course, that is being driven by instant accessibility, user control. You have the electronic money on your phone, accessible to beneficiaries directly, fully addressing the last mile issue, the distance. And of course, the maturity of the payment mobile platforms is a factor. And of course, also the eCitizen was actually being rolled out as a big supply infrastructure available. So those are the main reasons that were underpinned the journey over the past 22 years. In terms of the lessons, the key overarching lessons that come from this particular paper include continuously addressing systematically the challenges of implementation, incorporating the feedback to improve the models, so listening to the beneficiaries, the citizens, and continuously improving the model, progressively leveraging emerging trends and technology, such as mobile money systems. The lessons, other lessons including tailoring the solutions to local context, investing in infrastructure like connectivity, working on the agent networks and leveraging that, and continuously engaging beneficiaries to build the trust. That's why Paul was talking about the complaints and grievances mechanism performing a very important role. And of course, also supporting the robust two-way citizen engagement mechanism. To conclude, so that we can give a chance to Plun and Director Kamau to also respond, what are the recommendations that we would make for Kenya? The first would be strengthening the last mile access. Even with the latest model, there's still arid areas still need access in terms of the infrastructure and connectivity. There will always be need to expand digital literacy and sensitization in terms of the programs, focusing on the vulnerable persons, older persons, persons with disability to promote full inclusivity, operationalizing the new legislation on social protection so that this is underpinned by the law and cannot be changed because of the changes in terms of the governments. Institutionalizing the regular independent system audits and grievance mechanism, that's very crucial. There is the electronic EGCM function that the ministry is supporting. In terms of the policy recommendations to other countries and development sector community, the idea would be treat these 5 phases, 5 lessons from Kenya as a learning framework rather than a model to be replicated directly. You need to digest it and implement based on your context. Prioritize foundational investments, connectivity, digital ID, regulatory environment. Implement reforms incrementally. So 22 years in Kenya, 5 reforms with very clear justifications why they were done. To development community, there is need to shift from funding isolated pilots and supporting scalable nationally owned digital payment systems, adopt global best practices, but fit it to local context. And finally, facilitate cross-country peer learning and technology transfers. So with that, I will hand over the mic to the moderator, my colleague, Mada, so that she can facilitate the next session. Over to you, Mada.
Thank you, Richard. And also thank you for that insightful session. And also thank you, Paul. So now we'll move on to responses to the paper by our government experts and specialists, and also to Plume and Moses. So as we move towards the conclusion of the session, we'll be looking at a short question and answer segment where we'll display questions for experts and specialists who will help us reflect on some of the key issues raised during the discussion that we have just had and the presentations. And they will offer the expertise and perspective on both the policy and implementations that we've gone over. So thank you very much. And just to highlight that the first question to Mr. Kamau, who is also director at DSA. So based on your review of the paper, would you say that Kenya has largely cracked the social payments model, or do you anticipate the need for a 6th round of reforms, having that Richard highlighted the 5 that we've already gone over? So over to you, Mr. Kamau.
Thank you, Malda, and participants. I first want to appreciate for this platform where we are sharing the journey that we have come as a country as far as social protection is concerned in our country, and especially on the payment of the social benefits to our beneficiaries, to the vulnerable beneficiaries in the country. I'm sorry, my camera has a problem, but I hope you can hear me well. And I want to go straight and respond from the review of the paper that has been presented very well by Paul and Richard. It's through the transition to fully digital mobile money-based payments addresses many long-term challenges and around access, timeliness, predictability, and even transparency, and also cost effectiveness. Because these have been challenges for a long time. All the different models that we have had in the past, as they were explained by Paul, they all came with the challenges. People traveling long distances to get their stipends. The issue of timeliness, there is a time we used to pay after even 2 months or even more. And people, because of the amount, some of them were waiting for the money to accumulate so that it can make sense to them. But with the mobile money, they can be able to access the funds every month with a lot of predictability, and also the cost involved in accessing the funds, both for the government and for the beneficiaries, has been addressed. So in that sense, we can say that Kenya has cracked the core payment delivery challenges that have existed over time. However, Kenya social payments operate in a dynamic environment shaped by technology, industry regulations, cybersecurity risks, and beneficiaries' demographics and behavior. So the current model is robust and efficient, but there are opportunities for continuous optimization and improvement. There is room for improvement. There is a lot that we can do to make it better and better. So moving forward, we look to the future adjustments to the model that will focus less on not on changing the model itself, but more on strengthening, especially interoperability. Right now, as it has been the way we are paying, we are using the eCitizen platform, that is the government platform, and using one mobile money operator. Arduino in the country, we have several other mobile money operators who also do mobile money transfers. So we have not been able to interoperate so that we give our beneficiaries choice to use other mobile money transfer platforms that exist in the country. We also know that the commercial banks, they also operate mobile money transfer. We have not been able to interoperate so that they can also be they can also support in the disbursement of these funds, so that accessibility becomes more a reality. The issue of data integrity, we still have some room to improve. The issue of proof of life, it has been explained very well by Njoroge. Right now, one of the challenges that we are facing, and actually this is where, that is what we are, our mind is on, proof of life for our beneficiaries. Right now, we are only identifying them with the ID card and the mobile phone number. But we are not able to do proof of life at payment. So we need to improve on that. So also continuous replacement and targeting. Is the way the program is right now, we are not able to do continuous or real-time replacement of those beneficiaries that exist because of different reasons. So we are looking at a future where we can be able to replace the beneficiaries that exit, that graduate from the program. And even when we wish to expand, we want that expansion can be done from time to time, or in a continuous manner. Not like when we open a window for expansion, we open a window for maybe 1 month for people to register themselves. We wish that we can be able to have a continuous replacement and targeting of new beneficiaries as the program goes on. The issue of two-factor authentication at payment level is very important. Right now, we are not able to identify our beneficiaries biometrically at the payment point. So we hope that as we move forward, we will be able to identify to operate biometrics so that beneficiaries can be identified to ensure that we are paying the real person who is a beneficiary. So the expanding the choice of beneficiaries is very critical. And also, lastly, we also need to improve on our two-way citizen engagement. So we are looking forward to have a robust call center that citizen can be able to call to make their grievances, to complain, to give their compliments so that we are able to support them in a better way. So this will involve continuous and effective monitoring and oversight. So I want to confirm that evolution of payment model will continue. However, we shall be keen to avoid disruptive overhauls to the payment model such that we do not inconvenience our beneficiaries. I think that is what I would wish to put across, Martha. Thank you.
Thank you very much, Mr. Kamau, for the very much insightful perspective and for offering your expertise on your experience as well. So I'll hand over to Madam Plun, who's a payment specialist. And the question that she'll be addressing is, from your review of this paper, which innovation within the payments ecosystem should the government prioritize and leverage to further strengthen the existing model? So over to you, Madam Plun.
Yeah, thank you very much, Martha, and to Richard and Paul for the fantastic presentation. I spent a bit of time specifically in social protection, in the design and implementation of the Hunger Safety Net program, and Inua Jamii, which is now called the Consolidated Cash Transfer Programme. And it's great to see that progress has been made in both the design and even just the growth of the entire program. So to specifically address the question that you've raised, Martha, there are a number of innovations that are top of mind when it comes to payments specifically. And the first one I will discuss is what Director has raised, and that is on authentication, because authentication is a very key feature when it comes to payment, especially of social protection payments. And there are a number of innovations out there that can be implemented or that can be adopted by government to ensure that you're actually paying the right person. A number of years back, when we were still designing Inua Jamii, we did talk about advancing from just the thumbprint to thinking about palm or iris as a way of authenticating beneficiaries, and it's because typically for some of the programs, the people you're paying, especially in the ASAL areas, you literally cannot even read their thumbprint, and that was it was a problem then, and I think it continues to be a problem now. So adopting other technologies that can be used for authentication is key. The second one is on the recourse mechanism. Glad to see that the enhanced grievance case management platform has been implemented. I know there is potential for it to really be enhanced. And here I'm thinking because payments and you must give the ability to beneficiaries to complain whenever there's an issue around their payments. So thinking about an automated solution or an automated platform, which every stakeholder has access to. And the stakeholder here begins, of course, with the beneficiary. If a payment fails, how are they able to complain about a payment that did not come through? If they've gone to the payment provider and they cannot access their funds for one reason or another, can they raise an issue, and can they know about the status of the resolution of that issue in real time? So which means both government must also have access to this platform, the payment service provider, and also the beneficiary. And of course, allow for offline verification tools, especially in the ASAL areas. And I know this is a bit also risky, because if you're allowing for verification, offline verification, then you may not be able to monitor real time, especially where fraud is introduced. But this can also be done securely. The third one, which I think is also very important, especially from an innovation and technology point of view, is adoption of AI and predictive analysis for shock response. Previously, and I'm not sure whether it's still the same, but it used to take a bit of time, at least 2 weeks for a payment to go out whenever there's a shock. Now, we all know that as Kenya will face recurrent climate shock, we can tell there are a number of shocks that will hit the country. But so then why should we wait until then? If we adopt AI in that whole value chain, and of course, payments is an important one. It's the one at the end of that whole value chain. But with the use of predictive AI, you can already tell that there's a shock coming, and it's it's gonna hit in 2 days, 3 days, a week. So you collect that data over time. By the time that shock hits, then there's money or these funds in beneficiary accounts. That's a very key one that should be adopted. I think government should look into doing that. And very, of course, closely related again in AI is on fraud detection. Leveraging AI for fraud detection is also very important. And can be adopted, so that whenever there is fraud, you can government or whoever the payment service provider can immediately tell there's something happening. They are monitoring transactions. These are not very large payments, so you want to ensure that whatever little money is going out is reaching the beneficiary in full. The other one, very quickly again, is on blockchain. It's adoption of blockchain and distributed ledger. I believe we all know about that type of innovation, and this is very central when it comes to just tracing that transaction, tracing the funds from the moment. Not just even the transaction, but from the moment the beneficiary is onboarded onto the platform or as a beneficiary up to the payment, it can trace until the end. We've talked about ghost beneficiaries. We've talked about flowback of funds, how you're able to tell when a beneficiary is alive or not. So with blockchain technology, you can be able to trace the funds to the end of to until where it is utilized. Again, automated risk management should be adopted. And there are a number of ways this can be done. APIs that are linked to all the service providers together with government. And of course, linked again to this integrated or unified framework that government is deploying. What that does is that it gives all the stakeholders real-time visibility on the risks that are affecting the program, and gives them, whoever needs to update any risks or to give an update on whatever is happening on the entire ecosystem, they can provide that information. So I'll stop there for now. Thank you, Martha.
Thank you very much, Madam Poon, for your insightful thoughts and recommendations, especially on incorporating AI and predictive measures, which is a very good point to bring out. So on to our third question, and hopefully we can keep it brief just because of time. And so this is to Mr. Kamau again. Looking ahead, what elements should be deliberately avoided based on the discussion we've had today? So I'll have to keep your time limited to just a minute where you can give your insightful thoughts, and then we'll wrap it up by handing over to Madam Poon to cover the last question.
Thank you, Mother. I'll try to be very brief. One, of course, from the past reforms that they have been trained, we have gained insights and lessons that suggest what should be avoided going forward. Number one is the fragmentation of payment systems, which undermines efficiency, oversight, and the whole economic scale of the benefits to our beneficiaries. We should also have what we call vendor or platform lock, in which limits competition, innovation, and value for money. That means as far as we should always be able to embrace competition, and innovation, so that we can be able to get our beneficiaries access their funds as cheaply as is possible. We should also have technology-driven reforms without beneficiary-centric design should be avoided, especially those that exclude the elderly and the persons with disability, and even those who are digitally the digitally marginalized groups, so that as we bring in technology, we should be able to consider all our beneficiaries should be at the center, so that we do not disenfranchise them, marginalize them even more by use of technology that makes that they do not understand. Weak data governance and cybersecurity controls, which exposes beneficiaries and government systems to fraud, should also, as the previous speaker has said, we need to be very careful so that we do not expose our beneficiaries to fraud. I had said that we need to avoid frequent large-scale system overhauls. As we bring these changes, we should avoid large system overhauls that again make our beneficiaries to be more vulnerable, to be more confused. So we need to do adequate piloting whenever we are bringing any change management. Stakeholder engagement, beneficiary engagement is key. And when we avoid all these pitfalls and many others, we will ensure that the program is sustainable, we'll build trust, and also long-term impact of the Kenya social payment systems. I think those are some of the things that I would wish to mention right now, Martha. Thank you.
Thank you very much, Mr. Kamau, for that. And then I'll hand over to Madam Plun, where we're looking at, in your view, what key design model issues and risks should the government of Kenya address in order to improve the current payments model for vulnerable populations?
Thank you, Martha. Thank you, Martha. The first design issue, which Director has already pointed out to, which to me maybe it's a design issue. I think it feels like it's a step backwards. The choice model, when it was being designed, I think there was some thought process into it by allowing beneficiaries to be able to choose the payments of service provider that they're comfortable working with. So I think that's one area that I think may need to be. I would highly recommend that government relooks at it. The answer, of course, is on interoperability. Interoperability just means that your government or whoever is the processor of the file, of the payment file, introduces this file centrally, and the payment is made to all beneficiaries, no matter the service provider, the payment service provider that they want to work with. If it's a bank, if it's a SACCO, if it's a mobile wallet, it doesn't matter. But you give beneficiary the choice on where they want to receive the fund, and then how you deal with the issue of liquidity or the last mile. There's already an issue. I know one of the issues that government was trying to address by going the mobile money way is the issue of agents or the access points. But with interoperability, with this framework around interoperability and ensuring you have multiple service providers, then it also opens up the entire agent network, so that you have your mobile money agents, and then you also have these banks also have their own agents. So think about it. So it's another 100,000 or 150,000 agents on top of the currently, I think, over 300,000. So beneficiaries can get the money wherever they want. So that's the agent network solution. From Again, like I said earlier, recourse mechanism, very important. I think there's a bit of training that also needs to be done around the agents so that agents become the first point where a customer can complain. If they, if the automated platform is unavailable, agents can actually be the ones to serve the customers first. From a fee perspective, that's also a design issue. I think for about 3% to go into the fees, that's quite high. I think we should look at government should look at how can this fee be reduced significantly, so that we keep the costs as low as possible, and this can be done. Again, like I said, interoperability can be done by Director, what you said around ensuring there's no vendor lock-in. You're introducing competition. You're looking at technologies such as open source, for example, to really keep the costs of technology down. Digital literacy, again, very important. We know in Kenya, people have been conned, or beneficiaries have been conned. So there's a bit of digital literacy and awareness that needs to happen. From a risk perspective, I think I'd like to just highlight maybe three. And one is on digital financial exclusion. We must be careful, even as we're saying, beneficiaries are paid using their phones. Not everybody has a phone. Not everybody has an ID. Not everybody can transact even on the phone. So looking at ways in which we can even keep the user experience or the user interfaces as simple as possible, so that your grandfather at the age of 70 can still use it. They can still access their money. Issues. Another risk is on fraud, and we've already highlighted which solutions can be used. Real-time monitoring, introduction or adoption of cybersecurity solutions in social protection payments that will be able to address the issues of fraud. And then operational reliability. When you have one provider managing the whole payment service, if they go down, and they know they rarely go down, then it's possible that can be an issue, and that's why you introduce multiple service provider to address that issue, or to address that risk. Thank you very much, Martha. Sorry, went a little overboard.
No worries. Thank you, Madam Tun. Thank you very much to both you and Mr. Kamau for your insightful thoughts. So given that we are limited on time, I would request that our presenters today respond to the questions in the Q&A on the chat, and then I will highlight. So the first question I will mention. So we'll go through the Q&A session as we wrap up. So the first question that was posted in the Q&A is, what is GRM system in Kenya, / social protection? And thank you very much, Richard, for your response, where we have the grievance and case management, which is EGCM, sometimes referred to as grievance redress management system, is a system that allows social protection beneficiaries to raise complaints and grievances so that their social protection sector can provide response. And a second question that was asked also by Justus, and thank you, Paul, for your response. The presenters will keep responding to the questions in the chat, and we will highlight. So Justus wanted to know whether the ministry is planning to use the central bank payment platform so that funds can be transferred directly from the central bank to beneficiary accounts, such as banks and mobile money accounts, depending on their choice, that is the beneficiary's choice of the payment mode, and whether this will reduce a lot of cost of transfer, improve reconciliation, and allow beneficiaries to have more choices and not be restricted to mobile money. And Paul Njoroge was able to reply and said yes, that they're currently planning to remodel the payment solution to adopt government to people kind of a delivery channel. So where beneficiaries will be able to select their preferred payment modes. Thank you very much for posting your questions in the Q&A. We will be responding to them shortly, and Sam will also be providing written responses. But before we wrap up and I finalize highlighting of the questions, I'd like to say thank you very much for joining us for this session, and thank you to the presenters also for taking us through the evolution of the payment system in the social protection sector here in Kenya. I'd just like to highlight that on the screen, we would greatly appreciate your feedback on today's session. So to share your thoughts, kindly scan the QR code that has been displayed on the screen, or you can also use the link that has been posted in the chat to offer your response. So your reflections on how you found the session today and any additional comments that you may have will be greatly appreciated. So feel free to scan the QR code displayed on the screen or click on the link that has been provided in the chat. So back to our Q&A as you give us your insightful feedback on the QR code. So one question was also asked by Rizwan, what is cash transfer mechanism? Does it refer to creating wallet or limited mandate accounts, and can beneficiaries open accounts at any bank of their choice, or would you have signed an agreement of one bank? I think also just to mention, looking at evolution of the payment systems, how it started from cash and how it's transitioned to a fully digital system. There was a situation where beneficiaries were limited to specific bank accounts, but I think now, based on the presenters, it has evolved to where they have more options. But a response from Paul is that the current model does not provide for bank accounts, but mobile money account, which is M-Pesa. Previously, there had been contracts signed between different banks. But if you look at the slides, which will be later provided, and also the paper that's going to be published, it will show and highlight the evolution of the payment modes that were incorporated over the years to where now it is mobile money, which is M-Pesa. And then as we wrap up, I'll go over the last question and the response, and then we'll move to closing remarks for this amazing session. So a question from Chirchir: since 2004, the beneficiaries have been receiving 2,000 shillings up to date. Why not also raise the amount to the amount of stipend? So thank you, Paul, for your response, where he mentioned that the challenge is on the fiscal space in Kenya, high demand for social assistance and low budgetary allocation from national coffers. So thank you again very much for the questions that have been highlighted in the Q&A. I wish we had more time to go over everything, but hopefully the presenters can provide their written responses that can be shared as you also give us your feedback on this session. And I'd like to say that as we come to the end of today's webinar, I'd like to sincerely thank our speakers for their valuable insights and their thoughtful reactions on the evolution of social payments in Kenya, from the cash-based delivery to the digital, which is now M-Pesa, and the data-driven systems that we have incorporated. And I'd also like to thank all our participants for the engaging questions that have been posted on our Q&A, and also for your active participation. Within the chat, I've seen a lot of compliments that have gone to the presenters in the session, so thank you very much for that. And your contributions and also your feedback will really enhance and reinforce the continuous collaboration across the government and such sessions as well. And I'd like to say that the transition from cash to code is not just a technological shift, but a people-centered journey, one that requires trust, inclusion, and accountability. And I can also see from the questions and also the suggestions and comments given in the chat that this is well aligned, seeing the transition that has happened within the digital and payment space here in Kenya. And I hope that today's conversation has provided useful and insightful perspective to inform the future policy design and implementation of social policies and social payments here in Kenya. And thank you very much for joining us, and I wish all of you a pleasant rest of your day. Thank you very much for joining us for this session today.